That's what we all need to be telling our kids, our grandkids, and making sure they're implementing. Because the thing is, you can make less money as long as you don't have a whole lot of debt. So, but oftentimes we get it kind of confused and think I got to go get the biggest and baddest and go to the best school, which I want you to do that, but I just don't want you to take out all that student loan debt. Because if you can graduate and make $100,000 a year and have no student loan debt, you're going to go so much farther than everybody else. Even if you only made $50,000 a year and didn't have student loan debt, you go so much farther. And the only thing you got to do is save a little bit every month, and when you get older, you be set for life. All right? Talking right to you. That's for you. All right? I ain't studying these other people right now, but that's for you right there. All right? Yes, ma'am.
Okay, I want to piggyback on the student loan because in credit repair, I see people all the time, like he said, who have $100,000 to $200,000 in student loan debt. One of the things that, as you're going through school, that you might not be considering is what your life is going to look like when you get that entry-level job right out of school, what kind of money you're going to be making, and what you're going to owe. So typically, if you are using a government-backed student loan program, you're going to get 6 months, and once you are out of school for 6 months, you have to start paying it back. The problem that I see again and again, and I have a client right now who, even though his credit scores are close to 700, he cannot get qualified for a home loan because his debt payment that they have to count against him for his student loans is too high. He has a fantastic job, he has fantastic income, but he got a little carried away when he was going through school. And so when he mentions that student loan debt, it seems like easy money, but it can suffocate you later on. So just really think twice.
Yes, I have a question for the panel. Sometimes when you've lived your life, you probably already made your debts. And some of us could be in a situation to where we feel like we can't turn around. It's just too much. We've been to school, we have student loan debts, we have credit debts. What would you recommend to somebody who really truly wants to change their current situation with their credit, maybe even want to buy their own home? What type of things would you suggest for someone who feel like, I'm getting too old for this, it's too late for me, or anything like that?
All right, excellent question. The first step is to actually have a budget. A lot of times what people do is they just look at, the younger generation, here's how much money is in my account right now. I can go swipe, 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 and then, oh, now this bill just hit, and I just went shopping, and now I keep going deeper and deeper. So the thing is, you have to have, the key word is financial sacrifice. If it's something you want bad enough, then you have to sacrifice. So we have a budget. A lot of time, but it's not a budget to control you, to make you be miserable. It's really just something to guide you along your path. It tells you, here's how much money you have coming in, and here are the expected bills you have going out. And when you say you want to do something as far as making power payments on credit card debt, or paying off a home early, or paying down a credit card, you put it in the budget. Personally, that's exactly what we do. So that's what I would recommend, is have a budget and have a strategic plan. As far as, if this is what, let's just say for me, one thing I want to do is build that house in Dangerfield, and it's not going to be cheap. So I have it in the budget. I have it in the budget. If I didn't have it in the budget, then I wouldn't be able to do it. Another thing is that building that we bought in Dangerfield, that's lower on the budget, but we're gonna get that fixed as well. But you just have priorities, and whatever it is, as far as from a personal standpoint, I'm paying extra on my mortgages right now because I want to get those paid off. My kids' cars are paid off. My car is paid off. I mean, we have different little strategies that we're doing, but what we do though is I don't take a whole lot of money and just say, let me blow it over here. If that's important, it might be 6 months out the year, let me sacrifice, but oh, there's a birthday or Christmas coming up. Okay, it's okay. Don't pay extra on the bills that month. Back up and use that money for that. I want you to reward yourself, but don't reward yourself 11 months out the year and then say, now I got a budget. That's what I would recommend.
I would add, even, in my business, credit repair, I think credit is super important. I think paying your bills on time, but I'm going to add one other thing. I think having a whole life policy that you can borrow against is probably the number one best thing that anybody can do for themselves.
If you will, do not leave here and don't think about what we're trying to share with you. What you're trying to do is save your financial life. So you want to have something that can step in and pay the family in the event something happens to you. Start low. If there are 4 members of the household, count $50,000 for each one. So start for a minimum of $50,000 and then build up, depending upon how much assets you have in your family. Then you start adding in how much the house costs to replace, how much my income, if it's lost, how much that family is going to lose. So you want to cover your income to your family. So that's how you start looking at it. How much is this family going to lose if something happens to me? So you want to make sure that amount is covered when you start looking at the limits of how much insurance you should buy. When you buy the whole life policy, it has a saving portion of it. But not only must you think in terms of saving in the life insurance policy, but save every paycheck. Most of the time we spend all the money we make. The Bible talks about tithing. Pay yourself at least $10, 10% out of every dollar you make. And you'll be surprised if you don't see it, you don't spend it. Remember, if you don't see it, you don't spend it. So save at least 10% out of every dollar that you make. I think Brother Joe gave somebody a $20 bill or a $100 bill. Don't spend all of that. Put at least $10 of that away. If he gave you $100, put $10 away. If he gave you $20, put $2 away. And if you make that a habit, you'll be surprised where you'll be in a short amount of time. And when I first went to Dallas, we were broke as a he-hank. We didn't have no kind of money. But I had to realize things would break down, and I had to go to the bank and borrow. Then I'd write checks, and I had to beat the check to the bank, or I'd try to let it float. And I got tired of doing that, and I said, I got to stop this, and I got to figure out what I'm doing here. So I started saving, and you'll be surprised where you'll be. Another thing to keep important is if the company gives you a match that. If it's 5%, 6%, whatever it is, put that back into a savings account. And that accumulates over a period of time. It's called compounding. And you'll be surprised where you'll be after you've worked a number of years. So always do that. Pay yourself first so you'll have something back. Buy good life insurance. Buy good life insurance. Go to a #1 rated company, because if you select the wrong company, that company won't be there if something happens to you. So what you want to do is buy top-rated life insurance companies, okay? That's who you select from, so that they'll be able to stand whatever they guarantee on. They're going to be able to write the check in the event something happens. So don't overlook the importance of doing that. But as I said earlier, if you can't buy the whole life, start term, and then graduate up to the whole life policy, okay? That's what you do. You start term and then graduate up to the whole life policy. All right, any more questions, y'all? Thank you.
So one thing, did y'all catch something he said? He said pay yourself first. Okay, so preacher, I'm gonna go against you. I say we pay God first.
All right.
I know what he's saying though. That's one of the chapters in my book. You pay God, pay yourself, and pay your bills in that order. So if you give God 10%, you put away 10%, then you still got 80% or so, well, minus taxes or whatever, to still make it happen. Hey, but we have a real life question right here. And panel, this is gonna be hard. This is gonna be a challenge. So let's say I'm in my 60s right now, and I didn't take advantage of anything that's being said right now. I didn't invest. I don't have a house. I don't have a business. I do work still, but the only thing I have to look forward to is Social Security. What can I do right now?
I think you should start dating.
We got jokes.
Date up. I'm just kidding. I'm gonna pass this down. Let me think on this one for a minute.
Okay, well, I'll start on it real quick and let y'all think. All right, so I say it's the same thing. No matter how old you are, it's never too late to start saving. Now, I will say, if you want to be a millionaire and you're 60 and you want to be a millionaire by the time you're 70, yeah, you got to put away $5,000, $10,000 a month. Okay, so let's put that out the way. But from that same story, I want that person to tell all of the younger people that are around him, don't make my mistake. And if you in your 20s, start putting away $200 a month, and then when you get 60, you'll already be a millionaire. But if you are in your 60s right now, still put away 10%. If you got your credit, build your credit up. If it's not good, it's not too late to buy a home. I would still say, you know, you don't have to buy a $200,000 house, but if you can have a $50,000 to $70,000 house, you still got time to pay that house off in like 10 years to where you don't have to pay rent and things like that, and that will make your Social Security check go even further. The main thing is you want to make sure you don't have debt. Right. Remember, it's not about how much money you make, it's about how much money you keep.
Something else, he talked about if you're later on in life, what should you do? Well, one of the things we've never been taught, and that is investment strategies. We don't think in terms of investment strategies. And so as a result of that, we think that, okay, well, I just go to the bank and put it in a savings account. That's all right if you're early in life, but if you're late in life, you need a different vehicle to get you where you need to go. And so you need to think in terms of investment strategies. And one of the best out there are learning the stock market equities, learning how to invest in stocks, how to go in it, and how to get out of it. And to get you a good stockbroker who can teach you and give you a vehicle so that you'll know how to invest in stock, and that money will be there and it'll pay you when you start to drawing it out. Because once you get 70 and a half, the government requires you to automatically start drawing money from your 401k. So it's not only Social Security, but it's other investment opportunities that are there. So you need to educate yourself on how can I invest. One of the things that Joe is talking about is real estate. We don't think in terms of using real estate as an investment strategy. But not only is real estate there are stocks that are there. So you think in terms of stock equities. So there are other items. There are other items other than just trying to do a regular savings account. Okay? Thank you.
What I'd like to add, working in a school district, I work with parents a lot. Exactly, that's what I do. I'm a parent liaison, and what I do is educate parents. I'm a single parent, so I can relate to a lot of things here. And just because we are in Morris County, we have limited resources, maybe locally, but there are other resources that are out there. So parents, don't give up on yourself. If you're out there and you're pushing your kids, because one of the things I do, I push for my kids to do so much, but I stopped and I thought about it, and I'm like, I'm doing so much for these kids, I'm not even taking care of my own self. And once they are out the door and they're gone, they're going to come back, because y'all know we did that to our own parents, that we come back. It's always a comeback type situation, and we enable them. We don't let them pretty much go through the things that they need to. It's a sacrifice. So we need to put ourselves in a mentality of wanting to sacrifice for ourselves so that we can have better for ourselves, that also do better for our kids. If the resources are not here locally, we should be doing what we have to do to get out and find the resources. It's a process. It's just like trying to lose weight and get healthy. You know, you stop, you start over, you stop and start over, but eventually you keep it going, you'll get it right. So we have to do that same thing for our finances. We can't give up on ourselves, because it's important for our youth to see us doing better and doing well, because we are the community. That's important.
So after thinking about it, I mean, you can still date up if you want, but if you're 60 and you haven't done a lot of things right, you're still going to be 70, and you're either going to be 70 with more of the same, or you're going to be 70 with good credit, maybe a house that you bought, and money and investments in the bank. So it's never, ever, ever too late to start doing the right stuff and getting better educated about your finances.
That's cool. Are there any questions at this time? Anything specifically you would like us to address, or something that you just have a question about? Going once? Twice? All right. Thank you, guys. Really appreciate y'all.
Thank you.